I'd like to welcome our new sponsor, Rothschild Capital Solutions. Rothschild is a commercial investment banker and direct lender. The company targets well-located assets for value-add investment, primarily in the Midwest and the Southeast. Rothschild is positioned to invest up to $35 million per deal. They may be just the partner or lender you've been looking for to turn your deals, even the most aspiring, into reality. Need capitalization beyond a debt financing loan? Rothschild gives you a full set of options: JV equity, bridge, preferred equity, mezzanine, development and construction. What do you need? The chances are Rothschild can provide it, as well as the experts to make the deal real. Click on the banner below the show to contact Gary Williams now. You've got the deal, Gary's got the backing you need. Click now. Hello and welcome back to another exciting edition of Rate Desk. I'm your host, Michael Thomas, here to talk about multifamily interest rates and other news. Today in the markets, all three of the major indices are down, sliding into the red zone for closing. Bright spot of the sector, I guess, is retail. Those numbers are up, seeing some upward trends there. And of course, other big news are more stay-at-home and or school-from-home orders that are hitting various parts across the country. So jumping on over to the U.S. 10-year Treasury, we are seeing that tighter than where it was last week by about 10 basis points. It came back down, so trading around 87.87 today, which is good to see. We are also seeing that crude oil remains range-bound in the $41 a barrel range, about where we were last week. Jumping over to multifamily interest rates, we are seeing a bit of a tightening correspond with the 10-year this week, which is nice. We're seeing the 223F 35-year fixed rate. That is quoting at 2.39, fixed for 35 years. And the 221 D4 construction sub-rehab loan from HUD, quoting at 2.99, fixed for 40 years. Going over to the agency desk, we're seeing the Fannie Mae rates are range bound from where they were last week in the high 290s, call it 294 today. And we are seeing those spreads continue to widen a bit. It's about a 15 basis point spread that's added on today. And jumping over to Freddie Mac, we're seeing that quote in about the 330, 340 range today, call it 330 on the more narrow side of that spectrum. So rates are up a little bit on agency side, not meaningfully, I guess, in the case of Fannie Mae, but up a little bit on the side of Freddie Mac. Jumping over the HUD corner, I mean, that really is the center of today's news. Nothing major or earth-breaking, still don't have the new HUD FHA map guide issued. We did receive a memo from the West region, which covers production for California, Arizona, Alaska, and the list goes on and on. Really, if you think of the Rocky Mountains plus California and Arizona, that gets most of that region. And they just issued a memo that reiterated they are also doing that thorough upfront application review, and they are rejecting applications that do not have everything that they need in the application up front. Couple key examples of that would be, again, a phase one calls out an issue for investigation for a potential phase two, and that's left unresolved. That's a no-no. The other would be if there's federal fair housing accessibility issues, for example, in the property that are called out, and the consultant that is doing the capital needs assessment just identifies that that is an issue and that an architect is recommended to provide a design and a scope of work for a solution to that problem. Again, that's a no-no because it's considered an open item. So anything that is opened up must now be concluded in the application, and HUD wants you to do that up front. The reason for this, again, the unprecedented application volume due to the drop in interest rates and due to the fact that lots of lenders are sending in packages from across the country. HUD really wants to make sure that they can expedite the approval of ones that are good to go, and ones that have remaining item issues are going to just be put in this rejection pile, which they give you one chance, but if you also have deficiencies on the second turnaround of this initial thoroughness, completeness review, they are going to keep the application fee. So HUD is putting some teeth into that. They're saying, take this seriously as a borrower, as a mortgagee that works with HUD. Take this seriously for your borrowers. Make sure you conclude all open items. We want a clean, fully baked package ready to go once you submit it in. And from that point forward, we will move it in an expeditious manner. We are continuing to see priorities for affordable housing deals rise to the top of the file processing timeline. That's good, particularly ones that have certain deadlines. If it's a new construction or they're timing it with the award of tax credits, those again continue to rise up. Everything else is being pushed really to next year that hasn't already been issued some type of firm commitment with a closing date set. Again, that's due to application volume. We see that continuing. We see that trend continuing on into next year. Clearly, nobody knows what the future holds in terms of interest rates, but we are still in a very favorable interest rate environment for the HUD FHA financing. So again, if you've got something that you're thinking of putting together, you might want to just do that now so that you can resolve any of these issues. So when your application goes in, you've got smooth sailing to a firm commitment, which leads to a rate lock, and then of course the closing, subsequent closing after that. That's what we all like to see in our business. Thank you for tuning in to another exciting edition of Rate Desk. I am your host, Michael Thomas, signing off.